How you guys doing? My name is Mike. Welcome back to the video. Today I'm going to be talking about a couple different things. The first thing on our agenda that we're going to talk about is why you need to start investing right now. The other two things I'm going to talk about is I'm going to be going over my growth portfolio as well as my Roth IRA in the M1 finance program. So let's get started. The first thing we're going to talk about is why you need to get started now. When investing, you have two things that help you get the highest return. You have your money and then you have time. Those are the two most important components in the formula to get you a really high return. It is important to start investing now is because if you start now and you stop in a couple of years, you're actually going to end up having more money later in the future than if you started later and had to keep putting money. So there's going to be an example here, and this is shout out to Chris Hogan. He is a person on YouTube who helps people out with their finances. So I do get a lot of inspiration from him and Dave Ramsey. So those are really good guys. In this example that I found on his website, so I'm referencing it, is two examples. You have two friends. You have Scott and you have James. Scott used to be a guy who invested right when he got a job out of college. He started investing $2,500 a year. And for the next 5 years, he invested at $2,500 a year, and he gathered an amount of money of $22,500. And then once he hit the age of 27, he stopped because he realized, like, you know what, I don't need to be investing more money. I'm just going to keep this money here. And if you look on the screen, so again, Scott started around right pretty early on. And about 27, he stopped, just as James started. And what happened is his, you can tell his financial situation, he grew. James' situation is, he found out his buddy started investing and he's like, oh my God, I'm 27, I haven't started investing. So what he does is he invests $2,500 every single year until the time he retires. And if you look on this graph over here and you compare the two, even though Scott stopped and he stopped putting money away, he actually has a higher return than James does. And James had to be putting in more money over a shorter period of time to get the return that he had. So basically this explanation shows you that you need to start investing as soon as possible. And this shows that one of the most important things is not the amount of money you put in, but how much time you let your assets grow. In this case, Scott had his money in the market longer, so therefore he's going to have a high return, where James tried catching up and he couldn't do that because he didn't have enough money and time on his hands. So it shows that, like, this is why you need to start investing right now. So if you guys are on the border about investing, there's no excuses to start investing. You can literally open up an M1 finance account or a Robinhood account, and you just have to put in a small amount of money and you just watch your money grow. So put some money in, even if it's a little bit, and just get some wins here and there. So instead of going to McDonald's and paying $10 to get a meal, just take that $10 and invest it. So there's just little things that you can do to get you investing. So that's why you really need to start right now. So this is the power of the compound interest and why you need to start investing sooner. Okay, so there's that. And then let's go over my portfolio. Okay, so currently right now in my high growth portfolio, I have $37,663.29. My money weighted returns at 69.82%. Again, with the whole virus going out, my stocks are still increasing or appreciating in value, which again I still find very strange, especially with the nature of the economy right now. But I mean, like, I'm gonna take it for what it is. So let's just go over it. Triple Q, I'm still underweight in this portfolio, but any money I get is going to be going into here. So just, eventually over time it will equal out. And then ARK and Tesla are both overweight because I want 20% in each, and they happen to be at 23.9 and 24%. And then let's go to my funding. I didn't make a video last week because I got a little busy, had a couple things come up, so I wanted to focus on those things. So last week I did get paid, and I did have a little bit of money left over to put some more money in stocks. So that extra amount of money that I put in was $175.61. And then that same week I also have my weekly $125 deposit, so that got put into there, which ultimately allowed $300 to be used to buy some shares. So in that buying process, it bought me 1.33 shares. So I finally was able to buy one full share with the money that I put in. So it's very exciting. And then again, this last week, another $125 went in, and then it probably bought me like half a share. Yeah. So Triple Q got another half share. So just over time, just like share, another half share, another share. and ultimately, like over time, like my pile of stocks and ETFs is growing over time. So I think the last time that I was on here, like I had like 81 or 82 shares. Now I'm at 85. So again, we're slowly building up that portfolio, which is awesome. So total money I've put in was $27,714.87. This is my value. So basically my annualized return is 35.73%. So again, this is a pretty sick return. Like again, very happy about it. Still concerned why it's so high because how the economy is, but again, if something's good happening to you, like you're not going to question it, so you just hopefully keep it going. So the keys to how this portfolio is growing is just consistently putting money over time. You know, I didn't just put $27,000 overnight. I was putting in slow amounts of money every single time I was getting paid until I got this. So I've had this account for about 2 years, and I've been building this account for that amount of time. You know, beforehand, I always wanted to invest, but I didn't know what to invest in. I was like messing around with penny stocks and day trading, and that's just not the type of investing or type of trading that I like. I just like to focus on like long-term investing, and that's really where people gain the most value and wealth from. So this is, let me just finish the funding history. So the funding history, again, the last time was like 7,700 or 7,900. Now we're at 8,200 for this year. And now we will be switching over to my dividend growth account. So very excited about this. So currently right now in my Roth IRA, I have $12,350.77. My market gain's 230 in my earned dividends. So since the last time that I made a video, I actually got paid some dividends. So I'm very excited to show it to you guys. Like I love getting paid dividends. So this is a very exciting time for me. So earned dividends, $152.73. So let's go to my activities tab over here. So when I made one of my last videos, I did forget to add the 6 cents here from West Pharmaceutical, but we'll start with that. So I got 6 cents from West Pharmaceutical. Then I got my DIV Global Super Dividend US ETF. I got 87 cents for that. Apple, $1.23. Main Street Capital, I got $1.03 plus the 11, plus 2 cents. Costco, 11 cents. O Realty, 65 cents. Accenture, $1.07. I currently don't have them anymore because I found out they were on MLM, and I don't believe in MLMs, but I did get paid $1 and then I got rid of them. So luckily I got a dividend payment. And then Texas Instruments, $2.32. So pretty nice dividend payments worth a couple dollars. And we're just going to go back to my portfolio, and then we're just going to be going over the overall winner. So the sector for the last week, oops, let me just switch this, was financials at 7.16%. So financials was the winner, especially with this COVID-19 or this virus thing going on. A lot of these like financial institutions were taking a beating from having to put out all this money, as well as allowing people to borrow money with almost zero interest. So it's, you know, these companies are getting a beating. So let's just go over the sectors, or each sector, which with the ones with the biggest winners. So in this sector, I just want to show you all the pies over here. The winner here is NVIDIA. I just want to show you guys everything. All right. 16.22%. So NVIDIA killed it in that slice. So let's just go back. Real estate. So on 1 week, okay, so on 1 week, the winner here was O Realty at 3.35%, so they're the winner this week. And then financials, I think Main Capital killed at 14%. So let's just show you guys all of these. 14% is the winner, and then that looks really good. Industrials. This one, I believe, was Cintas at 16.27%. Just want to show you the rest of them. Some of them did have pretty good rebound, so very good stuff. Healthcare, I think the winner here was Zoetis at 8.08%. We'll show you the rest of these. Just so you guys know, like Zoetis is, it's a subsidiary company to to Pfizer. And what Zoetis does is they create medicines for livestock and pets. So this is, you know, we all love our pets. All our livestock require some medicines in case they get sick. So this was a pick that I wanted to have in there. So Zoetis, you are the winner for that one. Utilities. So the winner here was American Waterworks, so congratulations. You guys are killing it this week. And then my top secret experimental, I got rid of my Vanguard Total International Market Fund, and I just wanted to switch to these high dividend plays. So the winner here is DIV 3.22. Consumer, I think Nike was the winner when I checked, 5.8 to 1. Yep, Nike is the winner here, 5.81%. So they're the winner. I love their brand. And then for communications, Disney was the winner with a 10% gain. And then again, just want to show you guys that I've maxed out my Roth IRA. So for the most part, I'm just waiting for any dividend payments as well as any market appreciation for this account to grow. So appreciate you guys watching the video. At the end, on like the YouTube description list, I'm actually going to be sharing these pies. So I'm going to share my Roth IRA as well as my growth account. So I'm going to share both of those. So in case you guys are interested in seeing what it's comprised of, like, you can definitely just take a look like that. So again, guys, appreciate you guys watching the video. You guys have a good one.